Volatility and disruption is something that all companies and all buyers and sellers all need to be prepared for.
We see a potential moderation of volatility, but we all believe there will be aftershocks when you have an earthquake like this.
We knew that there was pent-up demand, both in terms of buyers and sellers going into the pandemic. And it's not like they can just sit on those transactions.
We predicted that activity might actually bounce back a little sooner than most people expected. And I think that part of this was a function of the learning that happened coming out of the global financial crisis itself, where the companies that moved a little bit sooner were happy in retrospect that they had.
And it was our anticipation earlier in the year, as we were going into this time period, that we were going to see the healthiest companies really lead this M&A wave coming out of it. And if you look at the S&P 500, they're at record highs right now, almost $2 trillion of cash on balance sheets. And it's really the technology sectors and the healthcare companies that lead the way in that regard, with technology companies accounting for half of that and healthcare about a quarter of it.
M&A is about growth, and M&A is about, sort of realization of value. And so companies that focus on those priorities, but also, don't lose sight of their equally important priorities vis-a-vis customers and employees, are the ones that will be the successful ones in the long term.
A lot of the conversation has been around what's possible with specific strategic priorities. And so there might be a specific target they want to look at, and I think providing more creative solutions to those transactions has been key in terms of what we've done with clients. And I think ultimately we're helping them make these decisions and giving them full information to help them decide on their strategic priorities.
This type of crisis, like every recession, does tend to throw into relief internal problems that companies have. So the companies that address those and get out in front of them are the companies that will feel better about themselves, down the road.
In this environment, scenario planning has become more important than ever. What does my business look like in a downside scenario? What does it look like in a status quo for the environment? Or, what are some opportunities we could pick up on? That's just something that, we've been doing all along with clients. We always look at multiple scenarios.
Of course, during the pause in activity, where companies were prioritizing the crisis in front of them, they weren't necessarily focusing on how to optimize the portfolio. And so now is actually an ideal time to figure out how do you enhance your growth rate, how do you enhance your return on invested capital, and M&A is a key tool for doing that.
It's been difficult to sell non-core businesses that were likely to garner a multiple that's lower than where the company's trading publicly. But right now in this market, I think it's much more forgiving to corporates that are considering selling non-core assets, even if it's going to be at lower multiples, because they understand the need to focus on your core business.
One thing that's gained extra prominence over the last few months during the crisis is the need to look at every transaction, like every significant corporate decision, through the lens of social issues.
The constituents that are considered are now not just shareholders, not just employees, but you're also thinking about your suppliers, your customers, your community. It needs to be part of your DNA, and it needs to be a clear policy that's already in place, not just something that, hey, look what we're doing.
One thing we've said consistently to clients is not to let the urgent eclipse the important. And so we try as bankers, as advisors at RBC, to help companies think about the future.
And the companies that can manage through that are best positioned to perform and to execute on their strategic priorities.